Welcome to The Economy Magazine. I'm Benjamin Chong Alfares with some of the main stories in the global economy. Coming up in today's magazine, big European firms support Palestinian call for boycott of Israel, and San Franciscans bemoan the stark rise in housing costs. First, the headlines. Manufacturers around the world enjoyed a solid start to the year, surveys showed on Monday. A struggle for growth in China and a downturn in France took the shine of the overall picture. The market HSBC manufacturing PMI for China fell to a 6-month low of 49.5 in January. Meanwhile, Japan's PMI rose to its highest level in nearly 8 years. India and South Korea also reached their highest level since early 2013. Eurozone factories had their best month since mid-2011, and with unemployment near record highs, increased headcount for the first time in 2 years. They were led by a sharp pickup in Germany and a revival among the states on the region's periphery. France, the bloc's second biggest economy, remained a drag on the region. The euro touched its lowest level in 2 months following speculation the European Central Bank may ease monetary policy. The euro touched 1.3477 to the dollar as a monetary expansion is increasingly likely while inflation remains below target. Euro area consumer prices were up 0.7% in December, the fourth consecutive reading of less than 1%, and well below the ECB's 2% target. Economists expect the central bank to cut the benchmark to minus 0.1% by March. Pakistan is close to signing a deal with Qatar worth $2.5 billion a year for the supply of liquefied natural gas. Pakistan may buy some 3.5 million tons of liquefied natural gas a year from Qatar. Growing energy shortages in recent years have led to street demonstrations, and this winter, Pakistan lacked sufficient gas to meet the needs of domestic consumers. It remains questionable how Pakistan will be able to afford future LNG supplies given the country's weak finances. And soaring house prices in London may be pushing the market towards a bubble. The average London house price rose by 11.6% annually, according to figures from the Office for National Statistics. In the rest of the country, prices rose 3.1%. Houses in the British capital cost on average 11 times individual Londoners' income, according to a report by forecasting group iTim Club. In other parts of Britain, housing costs were 6.5 times individuals' income. Over now to a story by Daniel Roth regarding the Palestinian-rooted BDS movement, which has found willing partners among Europe's largest financial concerns.
Around the world, there is a growing willingness to boycott Israeli companies that operate and provide services to West Bank settlements that are considered illegal under international law. Last year, the European Union set a ban on funds going to projects operating in the settlements, and there has also been a recent wave of boycott announcements from European companies. Denmark's largest bank announced that it will begin boycotting major Israeli bank Hapoalim, and a significant Swedish bank may follow suit. Last week, Norway's finance ministry reissued a 2010 ban instructing its oil fund worth $810 billion to divest from 2 Israeli firms as well as 1 Indian firm, citing ethical reasons. In the Netherlands, the national water carrier cut ties with their Israeli counterpart, and a major pension fund divested from 5 Israeli banks.
They've been debating about their investments in 5 major Israeli banks since 2009 with the Israeli banks themselves. And then the Israeli banks have been telling them, listen, we are not violating Israeli law. In the case of PGGM, it's interesting to note, and important, I think, that they still have more than 100 million euros invested in Israel, in private equity funds and some Israeli companies in Israel proper, so the Israel that they agree is Israel.
Israel relies heavily on exports. According to the Israeli government, there are 600 Israeli-owned factories in the West Bank and $250 million in annual exports from areas considered occupied by the international community. The Israeli Ministry of Finance estimates that a drop of just 20% of exports to the EU could cost the Israeli economy over $5.5 billion and nearly 10,000 jobs. Still, some settlers aren't very worried.
People have been boycotting Jews for 2,000 years. If you ask me, in the last 2,000 years, our situation today is the best it's ever been.
But according to some observers, the growing international pressure coupled with the Israeli government's policy that supports settlement growth pose a risk to the Israeli economy.
What we're starting to see is that this is not going to be a problem that's going to be limited just to companies that are operating or located specifically in the West Bank, the occupied West Bank and East Jerusalem. But what is going to start to happen is that it's going to spread to all Israeli companies and to all sectors. There's more money given to construction in the West Bank and East Jerusalem. There's more money given to so many different things. And when it comes down to it, that's going to be at the expense of Israelis living inside the Green Line.
In Israel, there is growing concern. A 2011 law was passed that bans people in Israel from calling for boycotts. The Strategic Affairs Ministry has asked for $28.5 million for a PR campaign to counter the growing specter, and the Foreign Ministry is calling international criticism of the occupation delegitimization. For them, the problem is rooted in Israel's image.
When you Google Brazil, you see beaches, nice-looking girls. You see a rosy picture. If you go there, you see middle-class people with bodyguards. When you Google Israel, you see conflict, soldiers, the army, and Palestinians. If you go to Tel Aviv, you can walk free in the streets. Because of that, it's always an enormous surprise.
Indeed, economic pressure is growing. The uproar over Scarlett Johansson's involvement with SodaStream, a company with a factory in Mishor Adumim in the West Bank, has brought the issue to the forefront of the media.
So my real job is...
All of this attention is helpful to a movement called BDS, led by Palestinian civil society organizations, which calls for the total boycott of Israel. Last week, Prime Minister Netanyahu called for a meeting with government ministers to address the boycott issue, but the meeting has yet to take place. During Sunday's cabinet meeting, the PM rejected the notion of a credible boycott threat.
The attempts to boycott Israel are immoral and unjust. Not only that, they will not achieve their goal. It allows the Palestinians to step away from the table, and this makes peace less attainable. Furthermore, this pressure will not sway me away from the interests of the State of Israel, and particularly the security of Israel.
And we're joined now by I-24 News journalist Daniel Roth for a discussion on the BDS movement. Daniel.
How's it going?
Good. So, I mean, it's hard to not have a political aspect to this discussion because it concerns boycotting.
Absolutely.
Why is there a need for this boycotting? I mean, Israel has shown its willingness to negotiate. Why is there this BDS movement? Can you explain?
Well, so there's two separate movements happening. They're not exactly separate, but there's the BDS movement, which is a call for boycotting, divestment, and sanctions on all of Israel towards certain goals coming out of Palestinian civil society, certain unions and groups, and at this point, it's most of the major ones are involved in the BDS call.
Right.
The boycotts that we're talking about in terms of the EU, in terms of some pension funds in the US, in terms of the labeling, those are focused specifically on settlements. Mm-hmm. So within, outside of the Green Line in the West Bank. And so when, in the case of the Dutch pension fund PGGM, they still have $100 million in Israeli company in Israel proper.
So
as he
can
said.
I just can I just get an understanding here of PGGM? I mean, as somewhat of a cynic myself, money is money at the end of the day. The bottom line is the bottom line. Do these companies are they actually driven by moral concern? I mean, do they just have so much money they can play with it, or is there something else here?
Yeah, well, first of all, they do have so much money they can play with it. For example, one of the funds that is in question is the biggest fund in the world, which is the $810 billion Norwegian fund. They have a lot of money, but that's not really the point. The point is that some of them have sort of social responsibility calls or ethical calls that are supposed to guide their investments. So in the case of PGGM, one of the things that I learned in the research is that they've been talking about it since 2009, but they haven't only been talking about Israel. They've also been talking about divestment from China because of its occupation of Tibet, or in Morocco because of its occupation of West Sahara.
Right.
So
I mean, Morocco, Israel, China, we're talking very, very different kinds of countries. Is it is it really likely they would do that with China? I mean, can they afford to?
It's a great question that I don't have the answer to. China is a behemoth economy. It's and Israel is not. Israel for Europe,
right.
Israel's not as important as Europe is for Israel.
For Israel, sure, of course.
So the question of can they afford to do it with a place like China, maybe. I don't have the answer for that. The question is, would they? And again, I don't have the answer to that.
Okay, we're going to have to move on. Thank you very much, Daniel Roth, I-24 News journalist, for joining us on the BDS discussion. Now that takes us to San Francisco, a very different place, where exploding housing costs have made it the most expensive city in America, with the average rent at $3,400 per month. More in the following report.
The symbol of a divided city. Buses carrying Google and Facebook employees from San Francisco to work in Silicon Valley have been blocked by protesters several times in recent months. Longtime local residents say they're being priced out of their own city by high-earning tech workers.
Working class people cannot compete with the salaries that are being given in technology.
Oh, the tech industries are totally transforming these communities with paying no heed to the people who live here right now.
In just 2 years, San Francisco rents have jumped 30% and evictions 170%. Ben Caddy pays $720 a month for his studio, but 4 months ago, he got an eviction notice.
Landlord seeks to recover possession in good faith in order to demolish or to otherwise permanently remove the premises from housing use.
And so Ben and his neighbors are fighting to keep their apartments.
We have nowhere to go. I mean, I feel like the polar bear, that we always see this horrible picture of the polar bear in the North Pole, and the little bit of iceberg he's sitting on is getting smaller and smaller.
Ben and Chandra live in a neighborhood called Mid-Market, an area long plagued by poverty and homelessness. That is until Twitter set up an office nearby, bringing jobs and wealthy residents. This luxury condo building, a symbol of Mid-Market's gentrification, advertises 2-bedroom apartments for between $5,000 and $6,000 per month. The city offered tech companies big tax breaks to set up shop in these neighborhoods, a controversial policy justified by falling unemployment.
17,000 jobs have been created in tech since Mayor Lee took office. So we've been very successful. It's a fast-growing industry. And the great thing that we know about technology is that for every single job we create in the tech industry, 5 other jobs in our economy are created.
San Francisco officials have promised to add 30,000 housing units to the market by 2020, half meant for middle and lower income residents. As for the tech companies, they refuse to comment on the issue.
And now it's time for a look at the international media in Media Watch with Daniel Roth. So, Mr. Roth again, thank you very much for joining us. Good. So, understand, a bunch of us are very tired today because yesterday was
the Super Bowl.
There you go. And this is our discussion, isn't it?
This is the discussion about the Super Bowl.
Good.
And we're not talking about sports betting today. The first thing we're going to talk about, actually, The Guardian ran this story about what you can learn from the way pro athletes spend or don't spend their money. In most cases, it's spend.
What you can learn not to do or to do?
Well, you have to have the money that a pro athlete has to spend like a pro athlete. But this is actually saying, a huge number, 78% of NFL players and 60% of NBA players, 5 years after leaving the league, they end up broke, which essentially means that they're not that great at managing their money.
That's there. Okay.
So Dwayne Wade, a famous basketball player, said not too long ago, he said, when I was in college, I made $210 a week. Now every 2 weeks, I'm making $100,000. So the difference is obviously huge. So there's a lot of lessons in this article, and it's basically the stuff you can imagine. Watch your spending. Make sure you don't spend more than you can have.
Right.
Don't listen to get rich quick schemes. This kind of stuff. Not rocket science, but things that you have to remember, even if you're rich, especially if you're fast rich.
What else do we have here on Super Bowl?
So the Daily Beast ran this piece, kind of calling to question. Some analysts say that hosting the Super Bowl can bring $600 million to your city. And they're calling this into question, saying, actually, it's not really true. After you get through all the expenses, it's usually about 25% of that. So, while it's no small prize, it's not quite that big, and they're sort of calling into question, is it really worth it with all of the sort of hullabub surrounding it and all the cleanup?
But it's so much fun!
Yeah, they say it's so much fun.
Yeah, they say it is, right? Well, we say it's so much fun. To join us again tomorrow. Thank you very much for watching. We have to end here today. Please send us your comments via website, Facebook, and Twitter. And I already said it. Join us again tomorrow.